Welcome to the breakout session on funding unicorns. There's a massive opportunity at the moment in Dutch tech. Jongens. So I don't know if I'm now actually... so technology remains an issue here. So back to the start. This is the breakout session on funding unicorns. As there's a massive opportunity currently in venture capital, investing in opportunities in the Netherlands. And we just want to explore how the market dynamics in the VC sector are playing out. We have a lot of foreign funds coming in, so co-investing becoming more the norm, how are funds positioning themselves as competition is growing. And we want to obviously make sure that our VC community is highly successful, but also serving also the interest of founders. So we have a panel here, a mixed panel with founders and investors. And I'd like to briefly run you through this awesome panel. With us online, Marie-Helene, who is a general partner focusing on European industrial tech at Speedinvest. Speedinvest has 600 million to invest in pre-seed and seed and early stage companies across Europe. In the Netherlands, investing in Swipe Guide. We have with us also online Bao-Y van Cong, he's investment director at Target Global, an international VC firm with 3 billion in assets under management, focusing on fast-growing tech companies across their lifestyle. And they're co-investing with Keen Ventures in Dutch startup Crisp. Then we have us Robert Verwaayen. I think we're first doing all the VC, and then we come to the person who really matters is obviously the founder. General partner of leading European VC firm Keen Ventures, focusing on A/B rounds, investment in European scale-ups, including unicorn hopefuls like Rescale, Crisp, team leader, and Study Portals. Then we have us Hans Scheffers from Rotterdam, CEO of HelloPrint, a global marketplace for customized printing. Your LinkedIn post states, shoot for the moon and aim for the stars, let's create dreams together. And we want to hear from you how you think to achieve those dreams. So welcome panel, and allow me to kick off with Robert. As a Dutch VC, and you've seen all the data points that we've basically ran through at the plenary session. So do you recognize this? And maybe can you set the scene for us, how you see the VC landscape and how it's evolving?
Sure. Well, thanks for having me. Well, broadly speaking, I think two things have happened in venture capital which are very interesting and interrelated to each other. So one is, it has never been easier to start a business. It's never easy to run a business, but it's never been easier to start a business. So as such, there's been a kind of flourishment of entrepreneurships, and so the opportunity pool, if you will, has grown tremendously. Now matching that opportunity, lots of capital has flowed into the asset class of venture capital, and what you also now see is billion-dollar funds. I wouldn't be surprised if we see a 500 or even a billion seed fund in the next 3 years. You have solo GPs being hyper-specialized and everything in between. The pendulum between that matching has swung, I think, mostly to the entrepreneurs. So also in the Netherlands, I think venture capital has become much more entrepreneur-centric, founder-friendly by and large. But still, there is this notion that sometimes Dutch venture capitals can be a little harsh, or valuations are a little lower than elsewhere in Europe. I think by and large, you have good VCs and slightly less good VCs or bad VCs everywhere around. I mean, we've invested in Germany, we've invested in France, we've invested in the UK, even in the US, and we see examples of both good VCs and bad VCs. I think the way to recognize a good VC for me is a couple of things. One is, they're really excited about your business. They want to always help you out. So they're available to you 24/7, and they want to help you with recruitment. They want to help you with introducing you to customers, etc. The second thing, I think, how you recognize a good VC is they're more concerned about growing the pie than their slice of the pie. So look for clean term sheets, and I'm sure we'll talk about that a little bit later. And the third thing I think is important, they're not trying to be the smartest person in the room all the time, so they actually trust the entrepreneur to make the right decisions. I think by and large we see an improvement, a much better improvement in the Dutch venture capital scene. A couple of wish items I have for the Dutch venture capital industry, if you will. So one is I'd like to see more collaboration among funds, so co-investing together, so that we can actually, provide longer runway for these Dutch businesses. And with that, I think, maybe have some standardization around what does a good Series A or seed or Series B deal look like. And by the way, we at Keen are happy to take a lead and publish, for example, our standard Series A term sheet. And thirdly, I'd like to, say this to everyone in the ecosystem. Not everything is better abroad. I think we have great entrepreneurs here and we have great investors here. So let's go. So thanks for this rant.
Thanks for the rant. It's great, and it's also a brilliant bridge to a poll question to get the audience, up on, up in active mode. The poll question will be, and it will appear in your screen. Dutch VC use terms that are less founder friendly than their US counterparts. So, yes, I agree. No, I totally disagree. Or I really don't know. Maybe you didn't have any experiences with American VC or with Dutch VC. So interesting to hear what your views are. And we'll just give you some time to vote and see what the results are. It seems like
moving targets, right?
It's tending towards yes. I agree. The don't know group is kind of bouncing up and down. I guess they're very obvious because they maybe the 17% are all the Dutch VC that are listening in the room. But by and large, I think we can see that there is at least the feeling or the perception that, and I assume it's mostly the larger funds that actually go and invest in other countries, but that investors from abroad, when they come here, do have more founder-friendly terms. Obviously, we don't have all the demographics on the people that are actually listening to this session, so there will be a path dependency in the data there, I think. But that's a good segue into a question to Bao-Y. You chose to invest with Keen Venture Partners in a Dutch company. So you are vested here. You understand. I assume you also did your research. What are your observations when investing with a Dutch VC alongside in a Dutch company?
Yeah, so maybe so first of all, Robert is here, but I would obviously also say it if he wasn't here. So it's great to be co-invested with Keen Venture Partners. They've been great partners, in
We're known to be blunt, right? You don't have to be too polite.
No, I think what was really surprising was at the time at which we invested into Crisp. So both us and Keen Venture Partners invested, at the same time. And what was surprising to me is, a company at the stage at which we invested into Crisp, if I look at the previous round investors, they were all family offices, individuals, entrepreneurs who backed Tom and Crisp. And so this is something that's actually quite rare across, I think, Western Europe, where venture capital is usually quite mature already. When we see a company at that stage, usually we would see other VCs already being invested. So I was very surprised that there wasn't any sort of institutional capital from the VC world already in Crisp. We've also invested into a second Dutch company called Lepaya, and it was the same there. And so I was surprised. I think all of these companies that we've invested into in the Netherlands, they were all at least tripling in revenues at the time at which we invested. So we're doing really well at that scale-up space. And nobody really kind of participated in that at the earlier stages. Maybe they were more risky at that point. Maybe they kind of didn't quite meet the standard, what a standard investment looked like. But I've never actually seen that across anywhere else in Europe or Israel where we typically invest.
And do you feel that they were underinvested, or did those angels or informals actually together support the company to a stage where they could actually effectively raise a round with a fund like yours and Keen?
I think there's a lot of benefits to having VC at the early stages, including, their network. So, as VCs, we do this full time, right? This is our full-time job. And so obviously, if I'm an angel, I typically have other things I need to do as well. And from a family office, I invest across other asset classes as well. So I felt like there were quite a few companies that maybe, I don't know why, were kind of under the radar, didn't quite meet the requirements of VC at the early stages. And so they don't have the benefit of, say, a VC network when they go and fundraise, right? So we actually go and we found the companies sort of through the thematic work that we've done, but they would have benefited a lot, I think, from having VC on at the early stages as well.
Yeah. Thanks for the insight. Maybe Hans, you started your company 5 years ago, or
9 years
you have
ago
9 years
already,
ago,
yeah,
but
yeah.
you raised 5 years ago. You recognize this, the experience of having experienced investors alongside supporting you in the growth of your company?
Yeah, I mean, so it's first of all and foremost, it's super essential, I think, as a founder that you deliberately choose with the end in mind. So I noticed to see that, and we also learned that the hard way, that a lot of founders are focusing on one single metric, which is actually valuation of the company. And I think it's very important that you deliberately choose what kind of path and what kind of entrepreneur you want to be and what kind of company you want to be. So, and that also relates instantly to the type of investor that you have. So are you focusing on very short-term value creation, or are you focusing on leaving a longer-term legacy, for example? And choosing that investor is super essential in the very early stage of that development, because if you don't do that deliberately, then you might end up with the investor that can't support you in that growth path or in that path that you want to achieve as a company and as an entrepreneur.
Are there any specific terms that you'd say you be aware of that will be holding you back?
Yeah, so I mean, what you see a lot is that a valuation on itself or as an isolated metric doesn't mean anything. So if you compare that with, for example, having very strong liquidation preferences or very strong restricted governance by one or multiple of your investors, that basically blocks you in the path that you want to achieve as a company. And also, I think it's very important to realize that it's never a happy path. So there are not a lot of examples of companies who are having a very linear growth path. So a growth path towards a unicorn status or above or slightly below that is very bumpy. So it's a bumpy road. So as an entrepreneur, you also need to ensure that if that path is less happy than you thought, that you can still be entrepreneurial and change the company in a way that it's beneficial for you and the company. And by the choice of your investor, it's essential that you keep that entrepreneurial capacity and that you're not completely restricted in that.
So you keep control, make sure that there's also an alignment of interests. And,
yeah, I mean, so in the end, it's venture capital, right? So that we're looking for, and that's risk capital. And if you want to aim for the moon or aim for the stars, then it's also essential that you sometimes take more risk. And sometimes that leads to a slightly more bumpy road in your company evolution. But then still you need to have the ability to steer the company towards that goal with the trust of your investors.
Yeah, and Marie-Helene, maybe I can reach out to you. And you've invested across Europe. You're also, it's actually a big compliment to your fund that from a small country base, you've been able to become a prolific investor across Europe. So you've seen many investment practices in Europe. Are there kind of red flags for you? What practices will you try to avoid when you're co-investing with other investors? Can you shed a bit of light on that?
Yeah, sure, with pleasure. I mean, I think what Bao said before, that's very true, that the big tiger globals and the indexes and Excel, it was very clear to Speedinvest that we cannot compete in the sense of sheer size and capital available. So for us, it was essential to go for differentiation and to have something specific. And therefore, our clear USP that we were working on was operational support and very much supporting the founders at eye level. And with at eye level, I, on one hand, of course, meet the terms. So we have seen so many founders that over the time, and as Hans just said, accepting really nasty terms would end up with, if it's a trade sale, at a 3 to 5x multiple, with nothing in their head. After 10 years, of working really, really hard. And I think this is one thing what we try very much term-wise and did from the very beginning, to be super founder friendly, to help them also in their negotiations with then follow-on investors, to realize that there is a healthy cap table in place, that the terms that they accept are something not blocking them for their future growth. But at eye level for us also meant, as a small investor that we were in the beginning, specializing on specific topics. It's very annoying for founders if they talk to VCs and they have to explain the market, the domain, and start from zero. And that was the reason why we said we really want to have specialized investment teams that are super focused and into certain topics. So me, for example, I'm just in industrial tech and climate tech. And with that, you have a completely different pitch in competing for the best startups, because you can, understand what's the challenges that they are having ahead, how it is to sell in enterprise. And this has helped us to grow in a way, even out of a very small country, and Austria is half the size of the Netherlands, not even, and became even recognized in the international scene. And I think the second thing what we did is, in order to co-invest and being able to co-invest with international investors, was to go out of Austria. So we have offices more or less all across Europe, from Berlin, Paris, I'm sitting in Munich, and hiring also very diverse and international VC talent into our team. And of course, with that, you have this network effect in finding also easier ways into then co-investing with the big international VCs.
Yeah, can we maybe dive into that a bit? So, I mean, your strategy is being more founder friendly. It's being more technically specific on a certain market segment, and it's diversifying also, and being across Europe with a very diversified team. But you are an early stage investor, so you will always have a follow-on investor as well. How does that position yourself to get some of the top tier investors into next rounds in your portfolio company?
Well, I think we very clearly keep the cap table clean and investable and investor friendly in these first rounds, because when we invest, having all this downside protection of enormous lick prefs or very tough terms, it doesn't really help you in the end of the day, because the fund success will depend on the 2-3 real winners and not on the losers or the ones that are not being successful. But if you have such terms in place, of course, it will be very hard for a follow-on investor to accept that. It's a lot of work, because usually when we do invest or co-invest at a later stage, and there is some angels or pre-seed investors in there, it takes a lot of effort to first clean the cap table and make it investable, and that's a lot of time and effort to do so. So many take off their hands with this teasing, those disadvantaged terms and go off.
Yeah, Maybe Robert, you want to say something about that as well, about lick prefs and other
Yeah,
terms that you come across?
Yeah, just to mirror what was just said, I think good fund managers or good venture capitalists know this is a probability game, right? That's why we build portfolios of companies, because we know there will be failures. And so if you have a venture capitalist sitting across from you who's hyper optimizing some sort of obscure clause in a shareholders agreement, yeah, they're probably not spending their time wisely, because this is about, are you in the winners or not? It's a kind of a home run driven business, and I think some venture capitalists don't quite have that idea yet. So I don't know if that answers your question or
Yes, and I mean, this is the lick prefs, and you're covering your downside. Maybe there are other control mechanisms that funds typically use that you would say, better not to use them. It's also holding back maybe the entrepreneur, but it's also holding back a follow-on investor.
Yeah, so on a liquidation preference, for example, if there is a more than one time, so you're actually also trying to secure your upside as an investor. The next follow-on investor will say, okay, that's kind of killing the ordinary shareholders, for example, which is often the founders. So how incentivized are they to really make this a big success? So it just makes everything so difficult. So that's why we are always looking for clean terms, so that also you make it easier for follow-on investments.
Clear, very clear. Maybe Bao-Y, from kind of more of an outside perspective, you've and maybe not just in the Netherlands, but also as you've been investing in Europe, as you're one of the big funds, you have actually invested in these follow-on companies. You have seen, you're in secondary, you're in these rounds. Any practices that for you would be a total red flag, and maybe, or any positive suggestions that you could make? Look, how the earlier stage VC in Europe, or let's take the Netherlands, be much more effective in supporting their portfolio companies.
Yeah. So I think so if we're just sort of on the legals and sort of setup of the term sheet stage, right? I think one of the things is definitely voting rights. So I think how much freedom do you give the founders to sort of make decisions, and for what do they actually need approval for, and like how are the thresholds set? So I think that's one of the things that I would want to have a look at, right? So I think if previous round investors have so much veto rights and like many different things, that wouldn't be a good thing for me as a follow-on investor. I think outside of the legal situation and so on, if we're thinking about support for founders, right? So I think it's not only on the financial terms, but I think it's also on operational support, on leveraging their network, on introductions, and also sometimes challenging the founders and telling them the uncomfortable truth about some of the things that, say, for example, that you would expect in the next round investors to want, and some of the things that you maybe have seen across other portfolio companies that don't work, and sort of being transparent with them, because I think that's the value add that the VC puts in. We sort of see a very horizontal view of companies because we see many different companies. We're rarely as deep in the company as the founders are, and so we can sort of help them benchmark how does their company compare to a different company at that stage.
Yeah.
And I think that's really important as well.
But if you're considering a deal and you're seeing issues in the cap table, that you or maybe terms that the founders have accepted in an earlier round, what do you then step away? Do you engage with the existing founder of investors to make changes? How do you address that?
Yeah. I mean, I think I would try to understand a little bit, where is that coming from? Because it can also be negative signaling to the follow-on investors, right? So why is, for example, if I saw a 2x lick prep, right, I'd be wondering, well, is this really such a good company if, the investors felt like they needed to put a 2x lick prep on there. And then I would try to revert it, right? So typically many of these things can be somewhat changed and so on to set up the company right for the next round as well. I think some of the things cannot be reverted. So let's say, for example, if there is a very large shareholder that's got so much stake in the company already, and then maybe if the cap table is dysfunctional or misaligned, or the founders don't have sort of many rights in terms of how they operate the business anymore. those things, are not revertible. And in this case, we wouldn't invest. And I think we've seen cases as well of where, I think, so not in the Netherlands, but where we've seen founders giving away too much stake and, maybe to investors that were maybe not so experienced. And so in certain situations, founders were actually not able to navigate the cap table anymore because some of the investors had too much of a controlling stake in the organization already.
Yeah. Joe, you must be clear-viewed because actually one of the questions we got in from the audience was, are Dutch startups financially savvy in the funding space? And I think what you mentioned there, that you come across some of those companies that have made some decisions early on that were maybe were not helping them as you were considering them as an investment opportunity. But Robert, you were wanting to say.
Yeah, I just wanted to mention that we're now only talking about how investors think about this. And of course, entrepreneurs also need to take their time to get to know their investor, because I think, if you build a relationship of trust, that has an inverse effect on transaction costs. It's a bit academic, but it means if we here trust each other in a room, then maybe we don't need this big of a contract to feel secure to do a transaction together. So
no, I can, that firmly resonates. I think you need to take way more time to really understand the rationale behind the investment. And I think also a lot of, so there are a tremendous amount of very, very good investors also in the Netherlands. It's also what I would like to say. There's absolutely no such thing as Dutch investors are giving way less good terms to founders than American investors. That's
but we are actually saying it's also up to the founders to inform themselves and actually make sure that their choice of investor, but really early on. But is that fair? I mean, many companies do this, founders do this for the first time. You were also kind of a young entrepreneur. You don't know all that stuff, right? The investor's done this many, many times. So
exactly.
How would you weapon yourself, or how would you prepare yourself then for that conversation?
I think Robert's advice is really, really good. Just take the time and don't blind steer yourself on valuation, because that's so easy to pinpoint towards, right? So take the time and really understand what is the rationale of the investor. Is he saying that he is a venture capitalist who wants to go along you on the journey for many years? Or is it more a private equity driven approach that they have towards your company? And I think the only...
Can you unpick that? Is that a control or what?
Yeah, I think so. So the usual drill of private equity is more restrictive, protect the downside, but also maybe even be already more aware of the upside. And take less risk in the future development path of the company. And in the end, so that's the big difference between venture capital and private equity. Yeah. And if you want to grow and you want to grow unlimitless, then you need the investors who are willing to take the risk with you, but also who trust you when the shit hits the fan a bit. Because in the end, you invest in the team and the founding team and the staff that is doing it with the team. So towards a certain mission and goal, right? Yeah. And sometimes that path is very bumpy, and then also your investors need to stand behind you and support you and still believe in that dream.
Yeah, so trust and alignment is really important.
Most
I get a question here from Mozambique, and they ask, okay, it's all about term sheet, great, but which are the most important terms to be aware of to really create big companies? So, or what are the important terms? They said also beside the term sheet. So I don't know exactly what that means, but I guess shareholder agreements, or what are the most important terms for great funding? Yeah.
Maybe let
so maybe
answer that.
Yeah, maybe Marie-Helene, you first. And actually, all four of us four of you can answer the question. But Marie-Helene first.
Well, I mean, it would be too easy if you can drill that down to a couple of terms, what makes you successful. And we have heard already a lot on what might block you from growing a really big company. And that is a very fine balance, especially in the beginning, for founders. How much equity, are you willing to give away and give up? Because, of course, we always say, especially as a seed investor, we need to have enough equity for the founders that they stay motivated. It's no fun after Series C if you end up with a single-digit equity number to stay motivated and work your ass off for others. So I think that is definitely an important fact to calculate through how many funding rounds you believe you might need, and what is the dilution that you can accept in each of these rounds. And on the other hand, it doesn't make sense from a founder perspective to stay completely, greedy and optimize for equity, because of course you need, and that's the secret of the growth, the right partners at your side that help you in growing your business. Is it network wise, and it is especially also funding wise to help you with big follow-on funding rounds. So from the choice of VC and investor, definitely if you want to grow a global company, opening up this global network of international funding is unfortunately still something in Europe that we need, and very often it is the US investors.
Okay. Yeah, I think we have to round off. So Bao-Y, very briefly to you, what is if you advising a young founder, what's a critical term to be aware of?
Yeah, I think I'd be very strategic about how much capital I want to raise and at what valuation. I think sometimes we think the highest valuation is the best. The risk there is if, I go into like a high valuation, but my company is not quite there yet. And if I don't raise enough capital to prove my point that I need to prove until the next round, I can go into like this kind of scenario where I, ran out of money, but I haven't quite hit the milestones yet to raise the next round. And I think that creates a lot of, sort of mess on the cap table. You're then dependent on existing investors or, other forms of financing to come in, not at terms at which you want to. So I would sort of think very strategically about raising enough capital to prove out what I want to from the valuation that I have to what I want to achieve in the next round.
Very, very wise. I think very wise insight there. We end with Robert, quick statement, and then Hans has the last word.
Yeah, super quick. I think alignment around the exit expectations is also important. I know that's not a sexy topic to talk about, but if you're misaligned there, lots of headaches later down the road, I would say. So.
Last words for me?
Yes, last word for you.
Well, so yeah, my advice is really don't steer blind on valuation and really define with the end in mind how you want to develop your company, and then choose deliberately who are the partners who are going to do it with you. And then base your company in Rotterdam, then everything will be fine.
Yeah, well, I think the upshot here is that with good investors and well-prepared founders, it's really important to align and to think strategically ahead of what more funding you will need across the time from start to exit. Also to discuss what exit expectations are. I think being transparent, being honest, being founder friendly, but just being friendly, being human beings among each other as well, instead of just being hawks at the two sides of the table, not seeing this as a winner-take-all optimization game, but really about how you can grow the pie together. I think some really important messages there. There was some specifics on lick prefs and control, voting rights, those things that we might want to look into, milestones as well, and see how that actually works in favor of growing the company, because that's in the end what it's all about. It's kind of investing in companies that want to grow and making it possible for that growth to exceed our expectations. And with that, I'd like to round off. I hope that the many people in the audience will take away some lessons. Obviously, the lines are open. Techleap is open with your questions or remarks, and we're happy to respond to you in another fashion. Now, I'd like to invite you to go back to the plenary session. So you have to click on the button of main session, and we go back to the end of this program. And I hope that there, maybe at the end, you still have some time to network and connect and make the dreams come true that Hans makes so explicit on his LinkedIn page. Thank you very much, and see you on the other side.